Hello and welcome to this session in which we will discuss reporting on compliance. The fundamental goal, the objective of reporting on compliance is to make sure the company, the entity under scrutiny is operating in accordance with certain established criteria. It could be laws, regulation, contractual agreement. For what purpose? To make sure we have transparency, accountability, and good governance. So we need to report on this to see whether the company is in compliance with those criteria or not. Now, reporting on compliance can be under three different contexts, and we have to understand this. We could do reporting on compliance under the context of financial statement audit. It means within a financial statement traditional audit. We could do reporting on compliance within the attestation engagement context, and we looked at this when we discussed the attestation engagement. Or it could be done under the single audit engagement. Also, we looked at this when we did the single audit engagement context. So in this session, we will focus on the financial statement audit context. Let's go ahead and get started. Before we proceed any further, I have a public announcement about my company, FarhatLectures.com. Farhat Accounting Lectures is a supplemental educational tool that's going to help you with your CPA exam preparation as well as your accounting courses. My CPA material is aligned with your CPA review course such as Becker, Roger, Wiley, Gleam, Miles. My accounting courses are aligned with your accounting courses broken down by chapter and topics. My resources consist of lectures, multiple choice questions, true-false questions, as well as exercises. Go ahead, start your free trial today. So what is a financial statement audit context? Reporting on compliance. Here the auditor is asked to provide additional service, additional tasks to do what? To provide compliance report related to the client's adherence to some sort of a contractual obligation or regulatory requirement. So, okay, great. You did your audit, your traditional audit. In addition to that audit, could you please report on this, whatever this item is? Could be compliance with environmental regulation, compliance with debt covenant, so on and so forth. So this task is part of the financial statement audit process. So the compliance report is issued in conjunction, notice, hand in hand with the audit of the client's financial statement. What does that mean? It means the auditor is already engaged in examining the financial record of the client for accuracy and fairness. In addition to that, you have these tasks. In these cases, the auditor's role is specific. They provide what's known as negative assurance. So we provide on this aspect of it, of the audit, or of that aspect of the assignment, not the audit, reporting on compliance, is negative assurance. So what is negative assurance? Negative assurance means the auditor is stating that they did not come across any material non-compliance with the contractual or regulatory requirement. All what we would say is this: we did not find any. It doesn't mean it does not exist. We are not giving a positive. We cannot give a positive assurance. We're given negative. And what's a negative assurance? We did not find any when we looked. It doesn't mean it does not exist, but we didn't find any. However, this does not involve a detailed examination of all the compliance. So this is different from what we call the full compliance audit. So report on compliance is different than a full-blown compliance audit, because you could have a full compliance audit or an attestation engagement compliance, that's totally different. In a compliance audit, the auditor will conduct a more thorough and specific examination of compliance matter under different sets of standards, which is full-blown audit basically. In an attestation engagement, here the CPA or the practitioner evaluate the compliance with specific laws, regulation, internal control, independent of the financial audit. So here you're providing this separately, not part of the financial audit. A little bit more about negative assurance. We need to be comfortable in understanding what negative assurance is. Negative assurance is a specific type of statement provided by the auditor doing what? Indicating that nothing during their audit led them, their review, their examination. If once you say negative, it means whatever we were doing, we didn't find anything to make us believe that the entity failed to comply with certain aspects of a contractual agreement or regulatory environment. We didn't find any. Now, when do you give this assurance, negative assurance? When is it applicable? Well, you did not identify non-compliance. What you're saying is, negative assurance by its definition is, I didn't find any. So when can you give it? When you don't find any. The auditor has not discovered any instances where the entity failed to comply with the relevant contractual or regulatory requirement. Also, the type of the financial statement matter. The auditor has issued either an unmodified opinion, which is a clean opinion, unqualified, indicating that the financial statement present a true fair position of the financial statements, or you could have a qualified opinion where certain aspects are correct but areas are not fully compliant or could not be audited, but we can live with that. So when can you give a negative assurance? If we have a clean or qualified opinion. Also, we did not find any instances of non-compliance, and this contractual covenant or regulatory environment, regulatory requirement, I keep saying environment, have been audited as part of the financial statement, and we did audit this section, whatever that section happens to be. This means that the auditor has examined these areas during their standard audit process, so we touched upon those. Let me give you an example. For example, a company could have a loan agreement requiring the company to maintain a certain level of cash reserve. Now, during the audit, obviously, you are going to be auditing their cash. So during the financial statements, the auditor also examines the record pertinent to this cash reserve requirement. And let's assume they found no evidence that the company breached this covenant. It means they are paying on time, they have enough in reserve as per the debt covenant. Well, the company financial statements were giving unmodified clean opinion. Well, in this scenario, the auditor could issue a negative assurance. Why? Because they audited this part, and they audited this part of the company, which is the cash reserve, and they're issuing an unmodified opinion. So they did the audit, they issued a clean opinion. Now they can issue a negative assurance, assuming they meet, there is no instances of non-compliance, and they can state that nothing has come to our attention that suggests the company failed to maintain the required cash reserve as per the loan agreement. In this statement, the purpose of it is to reassure the stakeholders, which is in this situation, the lenders, the bankers, to the best of the auditor's knowledge and based on the financial statement audit, the company is in compliance with this specific requirement. So it's good. We audited, no instances of non-compliance. What happens if we do find instances of non-compliance? Now, when the auditor discovers instances of non-compliance, the situation is handled differently compared to when non-compliance is found. Now, what you're saying is we did found non-compliance. Well, if the auditor finds that the entity has not complied with certain aspect or regulatory requirement, this non-compliance must be clearly described in the compliance report. So you have to explain what's going on. Well, they did not comply, and here's why. This means the auditor details what specific compliance issues were identified, providing transparency about where and how the entity failed to meet the required standard. That's what they have to do. Now, how about relation to the financial statement opinion? Okay, so the type of opinion expressed influence how the non-compliance is reported. Normally, a non-compliance report is issued alongside an unmodified or qualified opinion, usually. However, if the auditor gives an adverse or a disclaimer of opinion, well, then a compliance report can still be issued. However, but only, so when can you issue if you have adverse or disclaimer? Only in cases where specific non-compliance instances have been identified. So what you do, you'd say, okay, now it's an adverse opinion, disclaimer, and as far as the compliance, you would only kind of issue anything if there's non-compliance instances. So you don't give them a clean opinion, in quote, clean negative assurance on that issue. You would give them basically telling them that they are in non-compliance if it's adverse or disclaimer. If it's unqualified or qualified, you just say, you would describe the situation and you will issue that negative report. And you have to explain it. Let's take a look at an example. An auditor is auditing a company and finds that the company has significantly violated environmental regulation, a key aspect of this of the regulatory requirement. At the same time, suppose the auditor is unable to obtain sufficient information to fully assess the company's financial position, and they decided to issue, let's assume, a disclaimer of opinion. So now what we have here is a disclaimer of opinion. In this case, since it's a disclaimer of opinion and they are in violation of the environmental rules, then we will identify those non-compliance. We will identify. In this case, the auditor would still issue a compliance report, but it would specifically detail the identified non-compliance with environmental regulation. This report also, the purpose of it is to inform the stakeholders of specific areas where the company failed to meet the regulatory standard. Although they could not fully give an opinion on the overall financial statement, but when it comes to the environmental regulation, they were in violation. Let the people know they were in violation. But even if they were not in violation, and you will give a disclaimer, you don't give them a clean report on the compliance. Format of the report. So when the auditor issue a report on compliance, it should be formally documented, and the requirement ensures it's clear, transparent, and gives accountability. We could issue a separate report. This report on compliance can be issued as a standalone document, and this is different because it's standalone. It's emphasizing the compliance with the contractual agreement. So we're giving one whole report or regulatory requirement. So it's a separate from the auditor's report on the financial statement, allowing a focused and more detailed discussion. Here you can have more. You could put more because you are devoting one whole report for this compliance. Or guess what? If it's not a separate report, you can integrate this with the overall report for the financial statement. So alternatively, the compliance report can be integrated into the auditor's report. In this case, it would typically appear as one or more specific paragraph within the overall financial statement audit. Okay, and this approach links the compliance assessment directly with the financial statement audit, because you want to tell the users, look, there's something I want you to be aware of, providing a comprehensive view of the entity's financial statement in a single document. Now, which report you would choose depending on the nature of the audit, the requirement of the entity being audited, and the expectation of the users. Are the expectation they want more about this compliance, or they don't really care about it, depending on that. So by including the compliance report, in either way, the auditor ensured that the stakeholders are informed about the entity's compliance status in addition to the financial health of the company. Regardless, you're giving them the information, whether you want to show it to them in the whole report or issue a separate report. Let's take a look at this multiple choice questions from FarhatLectures.com. What type of assurance does an auditor provide when they have not discovered any breaches in compliance during the audit? Is it positive? Is it negative? Is it absolute? And is it limited? I'll tell you, one thing we can do is give absolute assurances. No one can give absolute assurances about anything, okay? You cannot give. Positive is basically like absolute in a sense. You don't do that. You don't put yourself on the line because you don't know everything. Positive assurance would require a more detailed and specific assessment of compliance, which is positive means you are sure about something. You're not going to give that. I did not discover a few things. Is it limited or is it negative? Well, you have to know limited assurance typically refer to a lower level of assurance that is provided in a standard audit, and it's not specifically to compliance breaches. When we look at compliance breaches, the term is negative assurance. Therefore, the answer is negative. What should you do now? You're going to go to Farhat Lectures, look at additional MCQs. That's going to help you whether you are studying for your CPA exam, accounting courses, or any other certification. FarhatLectures.com is here to help. Good luck, study hard, invest in yourself, and stay safe.